Hello guys, welcome to Brain FX. In today's video we are going to be doing a breakdown of the trade we took on Stepindex 100. Alright, if you just join our page, please do well to like and subscribe to our channel so that you keep receiving notification from us. Okay, alright, so without further ado, let's dive in. Alright, let me use a clear chart to do this. Okay, a clear chart to do this. Alright, so this is Stepindex 100. Now on the daily time frame, this is what we saw on the daily time frame. Okay, let me check. Alright, so this is what we saw. This is what we saw on the daily time frame. This was the trade we took. Okay, so what do we see if I come down to our daily time frame? Okay, so we saw the market was in a downtrend. That means making a series of lower high, lower high, lower low, lower high, lower low, lower high, lower low. So the market was going down. First of all, we saw the trend of the market. Okay, our bias was that the price was in a downtrend. So the next thing we do, we go to a lower time frame. Okay, from our daily time frame we went to our 4 hours time frame. Okay, so coming down to our 4 hour time frame, what do we see? Now there was a break of structure to the downside here, so price broke structure. Okay, came in and broke another structure, meaning it's still going down. All right, so this was the zone that caused the break of structure. We're looking at the buy stream zone that caused the break of structure. So this is a valid supply zone. Why? Because it broke structure. Okay, it broke structure after breaking structure, and there was a void there, liquidity void. There was a void, sorry, not liquidity, our all called imbalance of fair value gap. So there was a void there, and then there was a low here. This was also a high, sorry, there was a high that was taken. This high was taken out. Okay, so price came in, cleared this liquidity. Now this is our zone, our supply zone. This is the other block we saw there. Now this is it on our 4 hours time frame. So we further refine this our entry. Now you don't over refine your entry so that you don't lose the trade. Okay, so we'll go down to our 2 hours time frame. Now coming down to our 2 hours time frame. Now let me take this out. Okay, now coming down to our 2 hours time frame, what did you see? Now this is the same zone on 2 hours time frame, so that zone is still there. Okay, that zone into our 2 hours time frame. Okay, now in our 4 hours time frame, this is how it was. This is the zone we saw. Okay, so if we go down to our 2 hours time frame, we are able to refine this to this place. Okay, we're able to refine it down to the zone. Okay, then if we go to our 1 hour time frame, it's still the same thing. Okay, what we saw on the 2 hours, the same thing we're seeing in the 1 hour time frame. So we don't over refine, so we stop there, we don't refine further. Now this is our zone, so we waited for price to come. Now price did something very, very significant. So price came in. Now this was a previous high within the range, okay, within the substructure. So price came in and did all this. Okay, these are a series of equal highs, okay, around here. That's liquidity. Okay, so price came in. What it did, it took out all this. So people that started to sell from here, price would have taken them out. So price came in, it was doing this. Okay, whenever you see this, where you have your real zone, your targets, whenever you see this, it's telling you that definitely something is going to happen. So price came in, it's kind of did a series of equal high, another high, another high. Remember there's also another high here. So price came in, took out all these highs, and then tap into our zone. So when price tap into our zone, so what did we do? We go down to a lower time frame. So we come to our 30 minutes now. So okay, we come to our 30 minutes. We didn't really see where to enter from, so we go to our 15 minutes. There was a coming down to our 15-minute time frame, there was nothing much to see that would have given us an entry. Okay, so what did we do? We went further to our 10 minutes time frame. So the 10-minute time frame or the 5 minutes time frame, we would have gotten our entry. Okay, so actually took our entry from the 10 minutes time frame, but if you go down to a 5-minute time frame, you see it. Now after price tapped into our zone, notice before it tapped in, ever tapped in, it took out liquidity. These were highs also that were taken out. There was also another liquidity grab. So price took out all these highs, showing us that see, it's warming up to move down massively. So price came in, took out all these highs, it tapped into our zone. So this is also what we call liquidity, of course. So price came in, took out these highs and tap into our zone. So what did we do? We waited for a break of structure. Okay, we waited for a break of like something like this. Now this is what we're talking about. This is what we're talking about. Okay, so price came in, there was a break of structure, and then back to our zone before we sell. Now this is the zone, this is our zone. We're waiting for something like this. Now this is our zone. So price came in, price first of all broke structure, okay, there was a break of structure. So this structure was taken out. This is what we are looking at, this kind of pattern. So this structure was broken. There's a break of structure, this is a break of structure. So price broke structure. After price broke structure, it tapped into that zone that caused break of structure, and then it sold. Okay, and also notice here that there was a liquidity here. That's what we saw. There was liquidity here. There were some highs that were around this area. So price came in, took out all these highs. Okay, that's liquidity, which is what we saw here. The price came in, it took out all these highs, okay, and then broke structure. After breaking structure, waited for price to retrace to that zone before we sold. So that's exactly what we did. So let's take this out, let's take all these out, okay, to just for an illustration. Okay, so coming back to what we saw, so we waited, price tap into our zone, and then it clear out all these highs, okay, and then we waited for a break of structure. So where did we see a break of structure? So after price tapped in, there was a break of structure. We want to see a full body candle break. So this was it. So price came in, okay, and broke structure, meaning it took out all this previous low. Okay, so price broke this structure. So where is the zone that caused the break of structure? This zone caused the break of structure. This was the zone that caused the break of, this is the other block here. This block caused the break of structure. Okay, so price came in, broke structure, and we waited for price to tap into that zone. So when price tapped into our zone, that's when we sold. So this was the short. We took our shots here, and then of course this was the stop loss, our stop loss below the zone, okay, I mean above our zone rather, and then we took the trade. It was a long one, it was massive. All right, so of course we know we saw this trade in a higher time frame. So in a 4-hour time frame, this was our target, because we targeted this demand zone right here. So this is how we rode the trade massively down to our TP. Now I got out of this trade around here. Okay, I got out of this trade around here, and then I also waited for a retracement. So I took this trade, I got out of it here, I got out of the trade here. I didn't wait for it to get to this zone, and I waited for it to retrace, and there was a retracement. Now this was a retracement to the zone. I also saw another entry here. Okay, price came in, tap into the zone. I also waited for a double break of structure, just like I saw here. So price came in, tap in, and then give us our second entry. So it was perfect, guys. This is the kind of trade you look out for. You start from a higher time frame, okay, you don't chase trade, you put your trade and then you just let it move. Okay, you start analyzing, or of course you start analyzing from the daily time frame. We call it top down analysis. You can start from a weekly depending, but we actually started from our daily time frame, went down to our 4 hours, 2 hours, 1 hour, and then we now look at 4 entries around. It could be the 30 minutes, it could be 15 minutes, or 5 minutes, or 10 minutes time frame. So that's how we took our trade. So see you in our next video, guys. Bye for